Imagine investing 1 lakh rupee in a stock and seeing it grow to something like 10 lakh rupees in the next 3 to 4 years. I know it sounds like a dream, right? But it happens all the time, and that's what multi-bagger stocks help you achieve. What you need to be careful of when you're looking for multi-baggers is to have realistic expectations. So today I'm going to discuss my rules of selecting multi-bagger stocks and what I look for when I'm looking to buy stocks which could give me that 5x, 10x, 20x and even higher returns in the next few years. So first thing, and I say this by way of a disclosure, make sure that even with your portfolio of multi-bagger stocks, you keep things fairly diversified, because remember, the best of experts don't have a success rate of more than 20 to 30% in finding multi-baggers. But it's equally true that if 2 to 3 out of your 10 stocks in which you park your money equally, only if 2 to 3 out of those 10 work out, then also you make a lot of money. So think of it this way. Think about investing equally in 10 stocks. Let's say you invest 1 lakh rupees in 10 stocks and 8 of these stocks go bust, meaning your investment turns to zero. But 2 of these 10 stocks become 10 baggers in the next 5 years, in that they deliver 10x returns. Even then, your portfolio of 10 lakh rupees of investment becomes 20 lakhs. So that's still outperforming a lot of the other funds which you'd be investing in. Now, in reality, not 8 of the 10 stocks that you invest in will go bust. At least they would deliver 40, 50, 60% even if they diminish in value. So your overall returns would be much nicer depending on how successful you are in selecting your multi-bagger stocks. Keep also in mind that the best time to select multi-bagger stocks is during a period of slowdown, because when markets are as bullish as they are right now, a lot of the multi-bagger stocks, a lot of the small cap stocks, penny stocks are actually already trading at very high valuations. So with that, let's come to my 4 rules of selecting multi-bagger stocks. So rule number 1, the company that you select should not be very large. Think of a company with a market capitalization of 2,000 crore, 3,000 crore. In fact, I prefer companies with market capitalization of 2,000 crore or less. And I want you to think of the law of large numbers. In fact, just go search for the law of large numbers. If you're investing in a company which has a market capitalization of 2 lakh crores, for it to grow 10x, it has to have a market capitalization of 20 lakh crores. That's like creating the next Apple or the next Amazon. It's not like it doesn't happen, but the chances of that happening are very, very rare. On the other hand, if you have a company where the market cap is something like 500 crores, it only needs to get to a market cap of 5,000 crores for you to make 10x returns. And this happens all the time. There's 2 reasons why this happens as frequently as it does. First, a company which is in its young stage of growing, when it proves its product and its sales and revenue starts growing, there's also a concept of re-rating. The price to earnings multiple of the company is, let's say, 10, 12, 13. And suddenly it catches the attention of a lot of investors and they start pouring in money. And that's what swells its price to earnings multiple. So you not only benefit from the sales growth, but in the second leg, a lot more money starts flowing in, which is why you will see that a lot of the multi-baggers are first discovered by retail investors and not really by institutions. So rule number 2, you're looking for companies which are under the radar, which are not covered by many large institutions. Because remember the famous saying, if it's obvious, it's priced in. If a lot of institutions have already observed it, then chances are that its valuations would have already soared. Remember, there's a reason why a lot of big institutions do not actively research for companies in the small cap or very thinly capitalized space. They deal with public money and they deal with a very large amount of money. So they cannot, by nature of the sheer power of their investment, invest in some thinly capitalized companies, because buying just 1 or 2% stake in these companies would not be possible. It would keep hitting an upper circuit. So as I said, there's a reason why retail investors discover multi-bagger stocks before they become very popular and before, institutions, hedge funds and mutual funds start buying into these stocks. So I want you to look at this chart. So look at this chart. This is what you should be focusing on when you're trying to look for multi-baggers. There should be not many analyst reports on the company. The company should be in an industry with less competition. The trading volume typically of multi-bagger stocks is low, so there's not a lot of active trading in that stock. You try to enter before big money, institutional money starts to enter the stock. It usually has a new and exciting story, usually an unproven story, and the opportunity is a very early stage opportunity. Valuation mismatch, which means that you would feel that the company's revenue is growing much faster than the valuation at which it's available. There must be other listed players which are trading at far higher valuations in the same space. So this is what gives the company a high actual upside, and it may appear risky at first, but as things progress, these are the companies that give you very, very high returns going forward. There's another reason why people do not actively recommend multi-bagger stocks, analysts like me. You see, the reason is SEBI goes after analysts who recommend thinly capitalized small cap stocks, which is why I'm not doing that in this video, because it's really easy to move the needle on them. So I'll again say this as word of caution. When you're looking for multi-bagger stocks, don't get swayed by a lot of these reports on Telegram channels and WhatsApp and online which talk about 100x returns, 50x returns. Chances are that these are stocks being recommended by people who've already bought these and they want you to buy a little of these, because buying just a few lakhs of these stocks could make the needle tick. So when it comes to multi-bagger stocks, do your own research, or at least even if you're relying on somebody else's, spend some time understanding his reasons for recommending that stock. So rule number 3 of selecting multi-bagger stocks, you're looking for a company which has singular focus. Meaning that whether the company ideally makes just one product or offers just one service. I think a small cap or a young company which is doing 2-3 things, a diversified small cap, somehow it never works. You're looking for a company which does this one thing where the management has a laser-like focus on that. And once it proves its mettle in that one product or service, it may diversify. But to start out, what you're looking for is a company which just does one thing. And this is actually very interesting for me, because this is how I got started, and my initial few investments done when I was starting out in this industry some 20 years back, which turned out to be multi-baggers, were all companies which focused on that one thing. Today I invest in the likes of ITC, which is a very diversified conglomerate, but I'm looking to make only a fixed good rate of return which the company will make going forward. But if I talk about a few of the companies which I like right now, Anthony Waste, which is just in waste management. There's a lot of these companies which I talk about on my blog. I can't recommend all of these here. There's a report which we publish which you can go and buy. But if I tell you a very interesting story, I got started in stock picking by looking for companies which are focused on just doing that one thing. And that's because the guy who got me started, his name was Al Podell, who's not in this world anymore, and so Al was an American investor, and I attended one of his lectures back when I was at NYU. This is around 22, 23 years ago. And he told us a story about what got him started, because he used to call his investing style as, refinement of his everyday thinking. So he would look at something and feel that this is something that could grow. Obviously, this is a different time, and he went to a supermarket, and at that time he saw, like, under all the overcoats, there was like a little string and a plate, which is a security tag which they remove when you buy the product. And he wasn't sure of what that was, so he asked the sales girl, why is that security tag and the thread hanging under each coat? Is it because you don't want the coat to fly when it gets too windy? And she explained that, when you buy it, we're going to remove it. This is so that nobody steals it, because if you take the coat out with the tag and with the ring, the whole store will start beeping and, they'll catch the thief. And he thought immediately that theft is a market which is unlikely to go down, and theft as a market will keep growing. So whichever company is making these security tags and these anti-theft devices should do well. So he came back and he started looking at the company which makes these, and I think this, if I remember correctly, was in early 90s or late 80s. And the investment he made gave him close to 60-70x returns in the next few years, because now you see these security tags all over. So what I'm trying to say is that the approach he followed did not really require finance or Excel sheets. It was refinement of his everyday thinking. In fact, he did not need valuations at all. He hardly ever looked at them. From what I remember, he used to always say that I look at what's selling, what's doing well, and that's where I get my cues from. Obviously, the world has changed. These days, young startups at that stage often get picked up even before they come to the indices. There's a lot of private equity, there's a lot of angel investors who invest in these young companies. So by the time they come out with their IPO, they've already been discovered. But nevertheless, even today, you'll find lots of companies on BSE Small and in the small cap space which completely miss the eye of institutional investors. So, rule number 4, and this is one of the most important things to look at: management. Now, obviously, you're not going to be able to judge the management of a small cap company by interviewing them. They're not going to get on a call with you and answer your questions. So a lot of times people say look for competence and integrity. These are the 2 things that you should look for in management. And this is easy to find. And one of the ways you do that is you look at the balance sheet of the company in the management discussion and analysis of the last few years. And you will notice that there's a pattern to what they talk about in their balance sheet. If things add up, if they're not going back to what they said in their balance sheet 3-4 years ago, and they're saying the same thing, if they're not changing their stories, then that's a good management. Personally, while I pay equal attention to integrity and competence, I've realized it's harder to find out integrity of a person unless you've met them, you've dealt with them. Competence is easier to find out. And to be honest, in this day and age, it's not the really honest man that you should be looking for. It's okay if the man does not show very high level of integrity. In modern day business, you should be scared more of a guy who has a lot of integrity but does not know what he's doing. In fact, somebody who's extremely competent and extremely good at what he does, but he's crooked by nature, could cause you more damage. But there's only limited stuff that you can do. So I think do definitely look up the balance sheets of the company for the previous years, see their investor presentations, and look for this one thing. Are their stories remaining the same? What they said 5 years ago, are they still working on that business plan? And if they have changed, why have they changed their business plan? So this is the 4th thing that you should look at. And I think it's a very, very exciting space to get into. Small micro cap stocks, multi-bagger ideas. If you spot something, do share with me. I'm always happy to discuss it with you. No obligations. I can flesh it out with you. I can do a report on that. So do let me know any stocks of interest to you.